Hi guys, Greg Secker here, coming at you from the Trading Den. Well, today is a beautiful, glorious day in lockdown Britain, and we are trading breakouts. We're trading breakouts from swing highs and swing lows. I'm going to show you how to do that today. We're also going to show you how to do breakouts from support and resistance. Most importantly, where to set your risk, where to set your entry, and most importantly, of course, how much profit to gauge in the move. We're going to be covering all of that right here, right now. Let's jump straight into SmartCharts, and I'm going to give you a real practical step-by-step of how to do this so you get a real clear understanding of how the game is set up. Okay, let's start off by looking at a breakout from a consolidation range. Now, first of all, I want you to be really aware of this, is that we avoid trading breakouts if they are against the trend. That's a really important thing. So look at the prevailing trend, and remember, consolidation type breakouts where buying pressure has been building after, for example, the best kind of breakout you can trade is one where you've had a downtrend, you've had a correctional kind of pivotal change where, let's say, the downtrend's been broken, a new uptrend has started to form itself, and then buying pressure has been building within a consolidatory kind of range, if you will, up against an area of resistance. Now, doing this on low time frame charts is kind of irrelevant. Doing on a 5-minute chart or a 30-minute chart or a 15-minute chart, you're kind of wasting your time, because what could be a consolidatory range could disappear within 20 minutes. We want to see a decent range, a breakout range, which has been having buyers, for example, if we're going long. I'm going to do a long example this morning where buyers have really started building into this range. That short squeezes have been happening. Some have been getting stopped out, who have been going short. But ultimately, what you're noticing is this range has started to build itself up. And because it's come off the back of, say, a downtrend, you've got some interesting metrics you can use. Best way for me to show you that is by example. So let's jump in right now to SmartCharts. I'm going to look at the sterling yen chart. So for those of you using SmartCharts, bring up your sterling yen chart, go to the top right hand corner here and make sure you hit H4. That means you're looking at a 4-hour chart. So this is the H4 4-hour chart for sterling yen. Now what you'll see, since the beginning of the year, sterling has fallen against the yen. You can see there's been a steady downtrend. In fact, if I just draw that trend line in for you, you'll see that from, say, here. This was your steady downtrend, which got broken, and that got broken around kind of towards the end. Last couple of weeks of March moving into April. We're now, as of recording today, April the 7th, I believe. So we've got that break from the end of the last couple of weeks of March. So that was the pivotal, that's that downtrend been broken. Now we're starting to break up and create this new uptrend, and then you'll see there's this consolidatory range which is formed. So let me move this trend line out of the way, and let me show you how you kind of set the game up here to start analyzing this position. So I'm just using if you notice top right, I'm using my grab tool, and that grab tool really turns my cursor, if you will, into a hand, which allows me really to just move. I can actually move this all over the screen and position it exactly how I want it. And I want it in a way where I can really analyze what's going on. So that to me is a nice way of really getting into this and starting to analyze exactly how I want it. So the grab tool we find a very helpful tool in SmartCharts. So again, here's that downtrend, okay? You can see, I'm going to click on that and I'm going to put that back in place. You can see what happened. Downtrend was broken last 2 weeks of March. Then we started to form this uptrend, okay? And then we've had this consolidatory range. And this is about as picture perfect as you want to get for a long trade on a breakout at a level of resistance. Why is that? Because it's giving us a few things that are going to be very helpful. Let me start off by drawing a horizontal trend line. So if I look for horizontal line, I'm going to put that line really along the top of the resistance kind of level that's formed itself, which of course is around this level here. Now, what I'm also going to do is make sure that I color that line. Sorry, my screen has just moved across. Let me just put a dotted line there. I'm going to make this 3 so it just kind of pops out a little bit and you can then see it nice and clearly. Okay, great. So that dotted line there, we're going to call that 134.49. So 134.49. Now, something in trading you want to be aware of is the concept of the big figure. So if I write 134.49, really what we're saying there, if I can get a bit accurate, is breaking through that big 50 big figure. So I want to move that up a little bit. Yeah, so 51, getting through the 50 would be important. Don't worry about the numbers before the decimal point, it's after the decimal point. So after the 50 level is where I'd want to be getting long. And that seems to be where there's a resistance to price pushing further north. Now, the question then becomes, well, how far could it go? Well, let's take a look at that by drawing in another horizontal trend line. And this time, let's put that horizontal trend line up here. And I'm going to paint this line here in, we're going to make that yellow. So that's going to be our target line. And so we're really saying that, look, well, the market came up, kind of hit there before. Notice there's some resistance we had here, some resistance we had here. So I'm showing this as my upside potential. Now my upside potential there is, well, of course, it's like from 134.50 up to 137.50, let's say. So if we go from, we've got potentially 300 points on the upside. So a plus 300 pointer if we get a decent breakthrough. What is our risk? Well, that's something we need to analyze. And again, I'm showing you this more in a manual format so you get an understanding of really what kind of breakouts will work in our favors. Well, they're one where we've had a decent sell-off. As you can see, we've had a decent sell-off of sterling against yen. Now it's coming back. Now it's hitting against that zone, that resistance zone where you'll have seen there have been a lot of fake outs here, but then finally, if we get through this level, we know we've got something half decent on. The downside here, in other words, the risk, we've got to measure that. So we go back to trend lines, we go back to horizontal line, and this time we're going to put our little horizontal line in here, which if I'm just going to change the look of that, so we get a slightly different view. Great. And so we can see that we've got 132.57. So we've got 200 pips of risk with 300 pips of upside. That's kind of a nice looking consolidation range. It's a great level of resistance, it's a great level of support, and it's a great profit target. Now, how would we place it on SmartCharts? Quite simply, we'd be putting a buy stop order in here. So we can put our buy stop order. Now notice, as soon as we do that, we bring the stop loss line consistent with just below that green line here. That shows us that we're taking 191 pips. Of risk. I said it's about 200. Our take profit here is about 300 pips of profit, and our buy entry would be just above that level here. So let me just, as we move the buy entry, you'd expect it to move those limits there. And so yeah, we're about 220 pips of potential risk, making sure I'm keeping a 20 pip ride just south of that main support line there, which I've colored in green. I've got my resistance line I've colored in red, and I've got the yellow dotted line, which is my profit target. So I'm going to be just kind of moving that inside my profit target to give it a chance to hit, which really says to me I've got a price buy entry at 134.65. I can amend that a little bit and say, well, I want it a bit closer to 50, so to get a bit more precise, I can use the plus and minus arrows in the order ticket, which gives me a 134.53 level. If I get through that, I'm happy for an entry. My stop loss is 225 pips away, more than happy with that. My profit target was a little bit better than that. It was about 290, 295. So yeah, I'm risking 225 to make 295. Happy with the risk-reward ratio there. In fact, in currency trading, dissimilar to stock trading, we can easily take on a one-to-one reward risk. That's completely acceptable. Okay, so that's the trade then set up. Simply then, so as we can see, we're risking 225 to make 295. So if we do get a breakthrough there, and a solid breakthrough there, then we've got the opportunity to get a decent run on the way to that previous line of resistance. So it's 295 pips. It's a longer trade. This is over on a 4-hour chart. That's because we want to make sure we've got decent trading activity and decent trading volume built into that period of time. Each bar on that chart, don't forget, is a 4-hour bar. So that's how we would measure what our upside potential is, where our risk is. We've had a good sell-off over the last month or two, which means that there's good buying pressure coming back, or there should be good buying pressure coming back if it breaks or when it breaks this range. You can start to see in the last few days, over the last few weeks, buying pressure has started to pitter and move towards the upper ranges of this consolidation. So it looks good. We hit the green button, and of course that's putting the trade in the market, or ready in the market as a buy order. Of course, if I go to my trades screen, you'll see that in pending, that trade now sits in there ready to go, and there it is. So it's just going to bring it up large like it does, but there's your buy entry, there's your take profit, and there's your stop loss. If you want to see the actual drawing that we just did on the chart, you go back to charts, and wherever you left that last chart screen, which of course was bottom left here, that's the sterling yen, then that's that trade setup. So that's a good example of trading from a range or trading from a breakout of support and resistance. Now let's have a look at trading from a swing high or a swing low. So for that, I'm going to go top right here to my Euro Sterling chart. I'm going to just stretch this out so you can see it a little bit clearer. Let's have a look here. That's it. Now this is obviously after the fact, but I just want to give you a sense. Now, for those of you that haven't looked at my trend wave training or don't understand the difference between phase 1 and phase 2, if you haven't grabbed yourself a copy of SmartCharts already, go ahead and do that, because there is a complete training syllabus which is going to show you phase 1 and phase 2. To give you a brief understanding of what that is, if you have a look at this chart right now, this is a downtrend. This is a 50-period moving average, and you can see, so when the price is moving with the trend, we call that phase 1. When it's against the trend, phase 2. This is phase 1, this is phase 2, this is phase 1, this is phase 2, this is phase 1, this is phase 2. I think you get the understanding there that when the price is moving consistent with the trend, we call it phase 1. When it's moving counter trend, we call that phase 2. So what we're noticing here is that there seems to be this relationship with the 50-period moving average. When it moves and touches the 50 and then moves away again, that phase 1 movement seems to be a quite reproducible movement until again, then finally it bottoms out here. We can see that consolidatory range, and then it starts moving up forward. But for this swing high, swing low, this is obviously trading the swing lows. This is a good opportunity for us to trade this position. So we can trade it in one of two different ways. We can either trade the break of the bottom of the range, but better than that is when the market then pivots up towards that moving average line. That gives us a nice reproducible way to trade this market. How do we do that? Well, first of all, let's grab some tools. I like to grab, again, trend, and we're going to go, I'm going to put a trend line in, but this time along the bottoms. I want you to just to see why I'm doing this. So I'm going to take along the swing lows. Okay, there we go. Let me just, there we are. Great. Now, why am I doing that, you might wonder? Well, I'll draw another line here. And I'm going to put that on the top. Now, what that should give you an understanding of is the range of movement. That should be really helpful, because that shows you how much the phase 1 movement and the phase 2 movement are actually ranging, which means you've got a nice solid downtrend. You've got entries. Let me just see if I can mark that on this chart. Oh, here we are. This is what I'm looking for. So these moments here is what we're looking for. I'll draw another one in so you can see, but you should get the idea. So when we've drawn those arrows, these would be your short entries. It's consistent with the trend. It's where the phase 2 movement has moved up and then moves into a phase 1 movement. Now, if you want some precision around entry, often we're looking for a bar which tests high. Let's see if we can find one to illustrate. So this would be a high testing bar here, and then your short entry would be here. Same here, high test bar here, short entry here. And the key here is we can measure where our risk line would go. So our risk line, if we take another line, and this time we're going to draw a trend line, and I'm going to just change this trend line somewhat. I'm going to put that line across here. So this would be your stop line. Let me see if I can, there we are. Let's just make sure I was on the screen there. And this time I'm going to draw this line. This is your red. I'm going to make it dotted. I'm just going to go a little bit bigger so you can see. Well, the dotted didn't come out very well. Let's see if we can re-hit that. Maybe try that. There we go. Okay. So this will be your stop line, but interestingly enough, so you can have a nice tight stop with trading a swing high or a swing low, nice breakout down. You've got your entry is just as it breaks the consolidatory range where it pivots, if you will, against that 50-period moving average. So you're creating, if you look in this area here, when that consolidation range builds inside here and then breaks down, that's your short entry. So I'll draw that on terms of a line again. And there is some pretty decent symmetry here. So let's look. I'm going to change the color of this to be, let's call it just nice and green so it pops out. So then what you're doing is you're going short. So your risk is between this red point and this yellow, this red line, this red dotted line, and this green dotted line. If you want to measure what the difference between those two things are, we can hit our measuring tool. We can have our price range, and we can say, well, from this point to this point, how many pips? We're about 45 pips of risk. So if we're entering here, and then we're going to also look at, well, what is our, so we've got 45 pips of risk. What is our, we can just cheat now and use the same measuring tool. And we can see that our profit target is approximately 80, 89. So we've got a 2-to-1 reward risk. We've got a nice tight stop just outside this range, which is obviously touching against this 50-period moving average. That's your swing low. And what you're effectively looking at is a 2-to-1 reward risk. And you can see you've got some decent symmetry. We've got a trade here, you've got a trade here, 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 and here before it finally breaks through here. Notice here, this range here, you could have got pulled into a trade here. You might well not have done, you might have done. But you've got at least 3 or 4 good trades on this, on a swing high or a swing low. So they are basically your 2 different types of breakout trades. You've got one where either a market's crashed down, resumed, created a new uptrend, then consolidated, loaded the barrel, or should we say loaded the gun, and then when that breaks out, we can see from the previous highs, as we did for our previous example, where to put our stops, where to put our limits, and where to enter that position. And then we've got the breakouts from either swing highs or swing lows, from uptrends or downtrends. They are the 2 different types of breakouts. I hope you've enjoyed looking at those on the system here. I'm going to add a few more and I'm going to put them up on the platform. But if you've enjoyed this video, don't forget to hit like. If you haven't subscribed already to the channel, get yourself on that subscription list. And if you've seen me for the first time use this software and you're not sure about what it is, it's called SmartCharts. For every subscriber on YouTube, there is a 7-day free trial. Look in the description of this video and you'll see a link you can hit on to grab yourself a brand new free copy of SmartCharts, which includes a full training program, which is all based off the Learn to Trade training program. That's available for you as well for 3 days, for 7 days. And then and after that, you decide you want to continue, please do continue with us. Other than that, we'll look forward to seeing you on the next video.